Hey everyone, this is a market update for Sunday, October 24th, 2010. Um, Real quick, I want to first cover the S&P 500 day, shorter term charts here. We have this expanding shape playing out 1, 2, 3, 4, and we seem to be in a very choppy fifth wave. We have within that we have the smaller contracting triangle. Most of Friday was spent in a very small, narrow trading range of about 3 to 5 points on the S&P. Obviously, with the VIX so low, we don't expect much volatility in the markets right now. Again, this move closer up, it does look like a bull flag possibly playing out. So we need to watch the current highs right here around 1190. If those do get taken out, I think 1195 will be the next touch of this trend line early this week. In the event that we do break down here below this trend line, the next key pivot down to the downside is 1173. Followed by 1160. Again, we need a pretty significant down move to push these down. The market is showing strength. It's not giving up fairly easily here. So I think a push up could be coming fairly soon. I want to look at these gaps that I talked about during the week. I posted this chart. Typically, it's not healthy for a market to have so many gaps left unopened, especially for a broader index like the S&P 500. Gaps do occur, this is just part of the market, but for a new uptrend, if we're going to continue higher on forever, these gaps should not be left unfilled. It's definitely unfinished business down here, especially this huge 6-7 point gap we had, in late September. So definitely something to watch for. If we do make it down, we'll find some, resistance and some support at these levels. Just looking at chart of Friday here, like I said, we were in a very, very small, narrow trading range. It got smaller as the day progressed on. We had the big up open, came down, and then just started to contract. I think we will break up and over. 1184 was the high here, so we'll see how it reacts to that level. Also, I wanted to take a look at the U.S. dollar real quick. Something interesting. Late Friday, it was actually after hours, right around 5 o'clock, we had this flash crash kind of scenario in the U.S. dollar. You can see here we had two candles that basically wiped out, $3 on the DX futures here. We did recover a good portion of it into the close, but again, we still closed down 43, almost 44 cents on the dollar futures. Pretty significant, spike down. We'll have to see how the world forex markets react to that, and if this was something really to worry about on the dollar. Again, just something I wanted to point out. It did come on higher volume, and if you look at the daily charts, I posted on my chart of the day. But this was a flash crash here. It almost took out our lows, what we've been watching here. And if this level does get taken out, obviously the counts will be wrong on the U.S. dollar. But we were about 39 cents away from it. If this was a real spike down or was it just a flare, we'll see how the forex market reacts to that. I mentioned the VIX earlier. Again, the VIX is just being hammered here. I think the low right now was here at 17, and we were again in the 18 handle here. So just to see the VIX so low is, a lot of complacency. I think people are getting a little bit ahead of themselves. As the market's going higher, you would think that people are, buying puts to protect themselves and whatnot, but that's certainly not the case right now, and that's usually not good, with the VIX collapsing this week, despite us having some, a down day on Tuesday and whatnot. But definitely something to watch for the VIX. Current low right here is at 1550 or 1523. I don't know if we'll get that low, but obviously the key number here is 1790. If we do get below, I think that's not good for the markets, for the VIX to be completely dying out like that. Volatility has been, sucked out, and it's just not good to have so much complacency going on. I want to take a look at gold. Obviously, gold having a big up move in the past few months. We did retrace a little bit this week. I think we'll get a small bounce, and we'll continue our way down on gold. Overall, I think we may get back to 1150, maybe even 1100. But to the upside, watch for 1350. I think this is a wave 1, and probably get a wave 2 bounce somewhere around 50% retrace. Falls right around 1350 on gold. Moving on from gold, I want to take a look at Apple real quick. Apple, again, like I mentioned here, the trading range seems to be right around 300 to 315. We traded down there right on the earnings day. The low was 300, and the high here was 320 or so, but that was just a one-day thing. But overall, right here, 315 is the high of this candle right here, made on October 15th. So that's certainly the range right now. I think Apple's going to chop around here for a little bit, and we may get one more spike right over 320, but I don't think it's going to sustain for too long. Apple's had an incredible run up, and I think it needs to take a much bigger breather than it has here, and obviously here very early in the uptrend, but since then it's just been straight up, especially since late August. It's been another straight line up. Also looking at the Nasdaq 100 real quick, same. It basically looks like Apple there. This up move here, I'll highlight it. Looks basically the same as it does with Apple. So again, it's just a straight line up. Other high flyers in the Nasdaq 100 or the Nasdaq, Netflix here. Obviously another straight line up. And then Amazon, the interesting one. We had earnings come out, I believe, Thursday night. Friday, we were trading down after hours, but we seemed to recover and closed up about $4 on Amazon. So again, those are the high flyers in the Nasdaq right now. Looking at the weaker side of things, the financials have been the weaker of the big sectors. Obviously, I'll look at Bank of America in a second, but XLF, it's been holding up there pretty nicely. We had this bullish engulfing on the 18th, and then we've been, inside that candle for the rest of the week. As I mentioned, Bank of America is the weakest of the financials here. It's just, fallen off a cliff lately, similar to this move we had in mid-June. So we'll have to see if we get, I believe we will get some type of retracement, but Bank of America, the chart overall does not look pretty, especially since our high here in April. We've been going down while the market keeps going up here, so definitely some disconnect between the major financials and, the broader market, even JP Morgan here. A lot of choppiness down here. Still haven't retraced as much as the market has. Market's close to its April highs here, but the big name financials are nowhere near. I want to take a look at the Dow real quick. The Dow obviously much closer to its April high than the S&P is. We almost tagged it. We actually were above most of the closing highs, but the intraday high is still right around 11,258, and here our high was 11,213. So still about 40 some points away, but the Dow is obviously retraced much more. We'll have to see this week. It'll be very, very important to see how the Dow reacts. Still about 120 points away or so away from the April highs, but obviously the S&P is the weaker here, has much more catching up to do. But if the Dow can take out these highs, certainly not good news for the bears, and as far as the bearish count is concerned. So we could get divergence with the Dow making new high and S&P not making new high, but I don't think that's the case. Most of investors look at the Dow as the main index anyway. So the Dow making new highs will certainly not be a good thing. Also want to take a look at the Russell just real quick. The Russell even weaker than the S&P. We haven't taken out our flash crash recovery highs here on the Russell. So again, just quick picture of all the indices. They paint a similar picture for the most part, but some stronger than the others. Obviously, Nasdaq 100, like I talked about, the strongest, with followed by the Dow and the S&P. So it'll be interesting to see how this week plays out, especially with that after hours activity in the U.S. dollar I talked about, and we're approaching some critical points in the market. Again, 1200 seems to be in the sights if we can get over the current highs. So have a good week. Thanks.